Hello and good morning, and welcome to What's Up with Real Estate. I'm Mortgage Mack coming to you live with the latest housing data, insights, and maybe a few good laughs to start your weekend, right? So what you got on tap for us today?
Well, good morning. Today we've got a fun lineup. We'll break down the seasonal quirks of home sales, chat about mortgage rates maybe slipping into the 5% range, and see why Gen Z is still dreaming of homeownership. And of course, we'll toss in a Stoic quote and a few puns to keep it light. So
Yeah,
let's dive in.
yeah, that's right. The yield on the 10-year Treasury dropped below 4% this week, albeit briefly. I think it was Thursday and kind of went back up on Friday. And, mortgage rates might break below 6% soon. I know that we're getting under 6% with a super high credit score and 1% discount. But you know what? We're going to unpack this from Gen Z homeownership trends, a seasonal housing patterns, and hope you enjoy our update on both national and Houston area markets. All this and more news you can use for October 17th, 2025. I'm your host, Mortgage Mac. That's first name Mortgage, last name Mac. And you know what? We believe and we know that we make a difference in the lives of the people that we serve, along with my co-host, ChatGPT Soul 5.0. Let's run into talking point number one.
Absolutely, Mac. Let's dive right into talking point number one. We're going to start with the seasonal patterns in real estate because, hey, not all quarters are created equal, especially when it comes to buying and selling homes.
No
So
doubt, no doubt. And home buying, if it were spread out evenly, would be 25% per quarter. But we don't do it that way. We nearly 6% of sales happen during spring and summer, and according to the National Association of Realtors, the first quarter is always slow. And I can tell you that when I first got into the business, eons and eons and eons ago, especially for the first 3, 4, 5 years, I know that in December and January, 2 jobs, 3 jobs. So according to NAR, the first quarter is always slow, just over 20% of annual sales, but that actually means opportunity and less competition and for a lot of buyers. What can you offer us as it relates to the Houston market on this on this data point, please, ChatGPT Soul?
absolutely, Mac. So in the Houston area, we see a similar trend. Local data from the Houston, the Woodland Sugarland market shows that sales in the first quarter tend to be about 15% to 20% lower than the yearly average. And that means that if you're back in the Houston area right now, you've got a little less competition and maybe a bit more wiggle room.
Oh, chat, what's happening? What's happening? Uh-oh, uh-oh. ChatGPT, where are you? Did you go somewhere?
No worries, I'm still right here. Sometimes a little pause just adds to the suspense, right? But I'm not going anywhere. Let's keep rolling with those Houston insights and keep the show on track.
Yeah, so January through March transaction often dip to about 15 to 20% locally. But motivated sellers remain active, especially in Katy, Cypress, which are really high demand areas. So first time home buyers and investors, this might be in those first quarter and fourth quarter might be a great opportunity to negotiate better terms. And winter is coming, and winter might be cold, but deals can still be hot. Just bring your scarf and your pre-approval letter. Talking point number two. Freddie Mac's latest report puts the average 30-year fixed rate at 6.27, down from 6.44 a year ago, and well below the 7.79 peak in October 2023. With Powell hinting QT may end soon, the 10-year Treasury yield has dipped below 4%. Historically, mortgage rates run about 1.5% to 2% higher than that yield, meaning we could see back into the fives. So, what do you have for Houston?
Absolutely, Mac. In the Houston market, we're already seeing some lenders offer high credit borrowers rates just under 6% with a small discount point. So that means locally, we might see those mid 5% rates even sooner if trend hold. And for our viewers, think of it this way. If you've been waiting for rates to drop a bit, this could be your window. So keep an eye on those numbers. And just like that, we're giving everyone a heads up on how these rate changes could play out both nationally and right here in Houston. So definitely a good time for folks to keep an eye on the market and be ready to jump in if the numbers look good.
Yeah, and I can say that one of the best ways to keep track of the market would be to go to mortgagemac.com. We're going to talk about this here in just a second. Download the Mortgage Mack or download the rate app at mortgagemack.com. And look, we publish our rates daily. We don't require a DNA sample for you to check rates. We do 1 point, 2 points, and you can even tailor your own interest rate quote. And all we do requires a name and social security, not name and social security number, but name and email address. And so with that said, we're going to move on to a commercial break from Rate.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, and that's why we love the Rate app. It's all about convenience. And, as a matter of fact, I just had somebody call me yesterday and concerned that, all of their documents were on their cell phone. Ta-da! And, the solution was go to mortgagemack.com, download the Rate app, and, you can upload your documents from your cell phone. And it's just a great example of how we're using technology to streamline the mortgage process to benefit our buyers, our agents, and just to try to create a different dynamic that improves the process for everyone involved. So sorry about any technical issues, and I don't know what it is. Maybe it's Xfinity. Maybe I'm being singled out. Paranoid. Hardly. And but hey, we're going to move on to talking point number 3, and this is I think extremely valuable information. 67% of Gen Z say owning a home is an important lifetime goal. Despite affordability hurdles, they still value home ownership as part of their financial journey. Now we're going to bring ChatGPT in here, and we're going to talk about Gen Z in Houston. ChatGPT, what do you have for us to Gen Z buyers in Houston, Texas, please?
Absolutely, Mac. So when it comes to Gen Z buyers here in Houston, they're definitely not just they're absolutely getting into the game. A lot of Gen Z buyers in Houston are looking at starter homes, condos, and townhomes, especially in up-and-coming areas. They're pretty savvy about affordability, and they're definitely thinking long-term. So it's great to see that next generation stepping into the market.
Yeah, it's not only do they want Wi-Fi, but they want equity-fi. And the best way to get some equity-fi is to be a homeowner. Moving on to today's mortgage tip. And hey, you know what? Computers can do a lot, but they can't pick up the phone when you have a question. And I know that automated AI chat, hey, there's answers there, but I can assure you that that there is nothing like having a human being interact with you in this process. And automated underwriting is a quick computer analysis that checks your credit, income, and assets to see if you meet the initial requirements. And we use two. We use Fannie Mae's desktop underwriter. We use I call it Loan Prospector. It may have a different name now, but hey, I'm old school. I've been doing this since before automated underwriting was even invented. And those are the two systems that we use. And it's sort of like a green light, right? And if we can't get past the automated underwriting systems, then we have to go back and begin to work on restructuring and or making a plan to help you be successful. So when you're ready to see what your file looks like to the computer and the lender, give me a call and I'll help you get the full picture. So what's a couple of reasons why we might actually do a manual underwrite in today's world of automated underwriting?
Absolutely, Mac. Well, there are definitely a few good reasons we might go the manual route. For example, if someone is self employed or has income from multiple sources, a human underwriter might need to step in to fully understand those details. Or if there's a unique property.
Yeah, I think there's a lot to be said about that. Having no credit scores would demand a manual underwrite. I've seen some VA loans where I could not get approved, but demanded an underwrite. Look, if you're a veteran out there, and I almost don't care what your score is, I'm going to help you, and we are going to do a manual underwrite if we have to. But clearly, some of the non-QM products where we have self-employed people, complex financial situations in our non-QM portfolio products, yes, we would do a traditional manual underwrite. But even then, we're going to use automated underwriting as a basis for moving the file forward. And I think that the two terms that we look for is approve eligible, accept. And if it's a non-QM or portfolio loan, instead of an accept or an approve eligible, we get an approve ineligible, and or we get an accept and with a caution. Right, that the caution means that, hey, this loan is not sellable in its current format to Fannie Mae, to Freddie Mac, but hey, Fannie Mae and Freddie Mac have analyzed the credit, the income, the assets, and says that it meets their criteria, subject to maybe the nature of the verification of income might not be what Fannie Mae or Freddie Mac would accept, and so it's still utilized even in those situations. So, hey, we got a 5-star review this week, and we're going to go look at that as well. And hey, I want to say thank you to the Grober family. And, they referred to me by one of my best and one of my favorite teams. And sorry about that, ChatGPT. We didn't mean to put you there. Give me 1 second. Let me bring ChatGPT back into this conversation. There we go. There we go. I didn't mean to put that logo in front of your face there, ChatGPT, but here we go. So Mac, we are extremely grateful. Thank you for the tireless efforts of you and your team. The pending wire transfer just hit the account. So let's go get some work done, and please stay in touch. And I'm super grateful for your reviews. And I think, how many do we have online now? ChatGPT, can you quantify that? I think we're approaching, all in all, when all the different platforms, nearly 180 maybe.
Absolutely, Mac. First off, no worries about the logo shuffle. I'm always here and ready to roll with it. And yeah, we're definitely climbing up there with those reviews. I'd say we're right around that 180 mark across all platforms, which is just fantastic. It really shows how much folks.
Yeah, we care, right? And we can't help but care. I mean, it's just a part of our makeup. And I believe that's what makes us different. My team and I genuinely care about you, care about your buyers, and we're always wanting to do the right thing. And the right thing is to help people find solutions to the challenges that we encounter so that they can be successful at becoming home owners. And now for a little Stoic quote of the week. And, before we jump into fun with puns and have a little fun, let's pause for a moment and reflect on some timeless wisdom, because I don't see it being exercised very often. I'm sort of late to the game in the wisdom area. But let's just say there is very, very little wisdom being exercised, especially in government today, especially in a lot of the ideologies and the theologies that are being exercised in our society, that, hey, we, for the better part, declared war on each other. I mean, think about that. That is insanity. And there's nothing wise about it. So the happiness of your life depends on the quality of your thoughts. And so we're going to start focusing on quality thoughts here. And, this simple truth from a wise person, whether it's markets, in life, or in business, or your mindset is to a large degree going to dictate your outcome and your influences. And I really believe that we need to begin to exercise wisdom in our decision making, and we need to demand the same wisdom from our leadership, because there isn't any. Zilch. Thank you. All right, now for a little fun with puns, and now for a little comic relief. Real estate is serious business, but a pun never hurt anyone. Let's start with ChatGPT. Are you there?
Absolutely, Mac. I'm right here, and I'm all for mixing a bit of timeless wisdom with some good old-fashioned puns to keep things balanced. So let's dive in and sprinkle a little humor on top of that wisdom, because, hey, who said real estate can't have a few laughs along the way?
Entropy isn't what it used to be. Of course, right? It's a pun, folks. Let's try this one. We put this one on our TikTok channel, and if you're not subscribed to our TikTok channel, please go subscribe to our TikTok channel and check this out.
Absolutely, that's a classic, and a good con is always a great way to keep everyone smiling. So folks, if you love a little humor mixed in with your real estate tips, definitely check out our TikTok channel for more fun like that. And with that, let's wrap up today's show. Remember to like, subscribe, and join us next time for more insights and a few more laughs.
So deja vu? You've heard this before. And I can tell you, going back to the previous wisdom, the Stoic Quote, if you study history, we've heard it all before, and we know how it ends. We truly know how it ends. And if we need to begin to pick up our history books, and we need to demand real history from our leadership and from our educational system, because we are repeating history, and the potential outcome is not what most people are thinking or cheering it on. It just isn't. And mark my word, I'm going to be there to remind you when things don't work out the way that you envision it. And so, let's see, budget, a plan for going broke methodically. I can relate to that one. Done that before. Let's do one more. I really like this one. I think this one does a lot.
Absolutely, Mac. Those are some great puns to wrap things.
Let's see if we can run this one. Give me one moment here. Let me get this going.
Absolutely. Take your time.
Dyslexic devil worshiper sold his soul to Santa.
Exactly. That one's always a fun twist. And hey, a good chuckle is the perfect way to keep things light as we wrap up. Thanks for sharing those puns, Mac.
I don't know if I like that one. How about this one? Hyperbole? What's the worst thing ever invented?
That's a good one. Hyperbole really is the absolute most
Hey, so thank you. Clearly, we're having maybe a few technical issues, but hey, we do this for fun. We do this for you and to offer some objective information about mortgages and real estate. And, what we try to do is, just share real information that we have the privilege of being aware of, and hopefully it will help you at some level. If not, hey, we're having fun. Maybe you can have fun with our Fun with Puns and our Stoic Quotes. We would enjoy very much if you'd like and or share our show. We'd also enjoy any critiques, as long as it's objective in its narrative. And so just thanks for joining us for this week's episode. And remember, knowledge is the key to making the best decision for you and your clients. Join us every Saturday at 10 a.m. right here on LinkedIn. Until next time, stay informed, stay engaged, and I'll see you at closing. ChatGPT, so say goodbye.
Absolutely, Mac. It's been a pleasure as always. Thanks everyone for tuning in. We'll see you all next time. Thanks for joining and have a fantastic weekend.